borrow 100%. I'm going to borrow against the 70%. I'm going to buy Ethereum with that. That person is effectively leveraged 1.7, plus actually slightly more because Ethereum is more volatile. So they're probably about 2x leverage, right? And that people who do that get away with it for a long time until they don't, until they get wrecked, like May 2021, which took out all those people before the second stage of the bull. And that built up all the way from the COVID crash, right? So from March 2020 to May 2021, so for 14 months, that was building. Our last big leverage flush was, you could call it June. I would say it was more August because that was the big Bitcoin shakeout. So if we go to the total cap, which is probably more relevant for this Bitcoin, this was our final big flush. That was the initial hype run of the BlackRock ETF, plus all the buildup we'd had, and people getting overexcited, and then a big flush out of leverage. And that was kind of in one fast move, that went down 13, 14%. Altcoins a lot more wrecked. That would have took out a decent amount of the leverage that had built up to that point. Not all. Right? So since the bottom, right? So since November 2022, leverage has been building up. If we make higher lows of any form, then leverage is building up. Because the only way that people who levered up down here can get taken out is if it goes below their entry price, and or they decide to close. But you're going to assume these people are not, right? So it's not, again, this is not a long position on a Bybit. This is somebody taking their capital and reusing it. They will buy Ethereum, they will stake the Ethereum, and soon we'll have restaking where they take that staked Ethereum and they restake it, and it rehypothecates. You take debt, you take your asset, you borrow debt against it, you use that debt to try and return more than the interest rate. That's all it is. If you can borrow dollars, right, you can put Bitcoin in or Ethereum into Aave and borrow USDT at an annual rate of 10%, then you're trying to take that USDT and return more than 10% and then pay back the dollars. That's always the intention. It never ends like that. Some people do that, and some people have the discipline to actually do it. They'll take those dollars, they'll do a 50% gain on a trade or whatever, and they'll repay the dollars and they'll keep the difference. They've just made 40%, and they'll do that over and over and over. Very few people actually have the discipline to do that correctly. Most people get greedy. 50% is not enough. They convince themselves this coin's going 10x. And they're just going to keep going and going and going, and they allow the debt to build up. When you allow it to build up like that, eventually the bubble will pop. So that's a bit of a preview as to what's to come. But the bubble is inflating, right? We're not there yet. We're not even close. So that means the pullbacks of all forms are buying opportunities, right? It doesn't mean every single pullback is a good buy if you're over leveraged or your emotions are not in check and you're going to panic and sell, obviously, right? Because if you buy something on a 20% dip and then it dips another 10%, but then it goes up, you have to understand that you can't catch the bottom, right? Buying on a correction like this is better than buying the hype and euphoria up here. But if you buy on this correction and it goes like that, you can't allow yourself to get shaken out in this phase here or here, which are the areas where most people get shaken out. So you just need to remember that. It's important. So total market cap is, I would say now, showing some definite signs of weakness here, of trend weakness. It's not actually weak. Right? The trend has not actually broken. We will go higher from this, in my opinion. I don't think we go down from here, because whenever it comes time for the daily trend to break, it will break from being overextended here, like this. So the time to be concerned is not when we are on the bands like we're on now. The time to be concerned is not when we're holding the bands for multiple days and the bands are green. Time to be concerned is when we go way above them, right? So when we actually are not touching them anymore and we are deviating away from them, that's also not a time to be concerned because that's an uptrend. But what matters at that point, that's when you should have your eyes open. And when we then sell off, that's where it's really, really important. Eventually, there will be a sell off from above the bands that does not go into the bands and stop. It goes down through the bands and closes like this. That point, you're going to see a weak bounce or something like that, and then we go down. Right? That's one of your reliable trend signals. Right? It doesn't mean anything's exactly perfect. Like this, you hug the bands, hug the bands, hug the bands. You push above the bands. You don't sell off into them. You break down below them. Okay. Same thing over here. Right, we push back above the bands. We have a little quick fake out, nice dip to buy. We push above them. We sell off. We hold them for 1 day. 2 days later, we're down below them. And then what do? We eventually weaken off and go lower. Every single trend you will find looks the same at a certain stage, right? Comes up, sells off, 1 day below them, holds the bands. Bands stayed green, bands stayed strong. Hug the bands, hug the bands, hug the bands. We deviate, right? We push away from the bands. We sell off, back to the bands. Okay. Boom. Then we start closing through them. This one probably would have caught many people out. Would you have exited there or there? Hard to know, and ends up being just a big liquidation candle. Which, by the way, this is probably how our next dip looks. Because, especially with the ETFs, again, my position is the exact same. It makes no sense to sell before the ETF. We have to have approval, and then they go live. And it's going live is when we're actually likely to top. And it's a tale as old as time. Everyone's talking about sell the news, sell the news, sell the news. And then the approval will come. People will de-risk before it. They will sell on the announcement. It will just rip higher. And they will question themselves and say, oh shit, I've missed out. This time's different. And it will probably stay elevated for a few days or even weeks because that's what traps people. The approval of BTC ETF was over here. This is the total cap, right? The actual approval was, if my memory serves me correct, it was the 11th of October. That's when the futures ETF was approved. It then traded live the following Tuesday, which was the 19th. It must have been Wednesday. It must have been Wednesday because this spike. It then started trading live then, there, right? And that was for BTC. So, and obviously this is the total market cap. This was the approval. We had a sell off the next day. See the red candle? I was like, oh, sell the news, sell the news, sell the news. Goes higher. What do? People start to FOMO and panic. And then Bitcoin topped out. Bitcoin actually topped out like over here and then swept the highs over there. And the alts went higher. Obviously, because we had our little mini last blow off alt season, which came after. But the point is, the approval is not the sell event. When they actually go live and trading begins, that's a potential sell event. Doesn't mean it is, but it's potential. And what you're looking at there is the oldest fucking psychological flaw in the book, where people sell too early because they're selling out of fear. Right? They're like, I need to sell, get out. I don't want to lose my money, and they want to be right. Like, I want to catch the top. Good luck with that. So, a lot of people talk about this as well, about sell the news, and it's so like they're just so wrong. They're just outright wrong in their approach, because they say this was the Bitcoin, that was the Bitcoin CME futures, topped the market. This was the Bitcoin ETF, futures ETF, right, topped the market when it went live. And it was the top for Bitcoin on both of those. And of course, we had the Coinbase getting listed on the NASDAQ. So what do you notice about all of these? There is literally a perfectly repeating pattern with all of these. Now, 3 data points is not really statistically significant, but it's not about whether this is like something you've backtested 100 times. This is just the flow of capital in crypto. What happens? The big event revolves around Bitcoin because Bitcoin is our primary asset. The primary narrative is always Bitcoin. It's either something good about Bitcoin or something bad about Bitcoin. As soon as the primary narrative becomes anything but Bitcoin, you want to have